Greetings, Keith Prater here with the NCM Farm Equipment Economic Update. So the demand index here is, remember, this is a leading economic indicator. So we use this to try and understand what the demand environment for the next 6 months ahead, what that will look like for the farm equipment sector. And I don't know if it's good news or bad news. The good news is that it's not declining anymore. The bad news is that it's flattening out. We just don't see a lot of increases here in the index. It still is well below the long-term trend line. And so we were hoping as we start to get better news about some of the relief payments that are hitting the marketplace, we'd start to see a pop. The demand index isn't showing that yet, but we do think over the next couple of months, it will start to increase. And if I were to project forward, I think you're going to start to see some improvement in the index. I think it will start to lift. And we'll give you all the reasons why in a few minutes. So it was up about 0.4% month over month, so slightly better, but not great. And then year over year, it's lower a little bit against what was a little bit of a momentary spike over here in April of last year. So we were still kind of trending down, still below that level. But again, I think we'll start to see it tick up over the next couple of months, and we'll go into the details as to why here in just a second. Let me get this moving. So industrial production also showing a little bit of that increase. We saw just a little bit of improvement overall. 3% higher month over month, still a little bit lower year over year. So we're still below where we were a year ago and below the long-term trend line. But we're starting to see the OEMs starting to build inventories again and build at least production activity headed into maybe what is a busier summer season, but also heading into maybe what looks like a little better demand environment, as I said before. So going over and looking at Purdue, it's kind of interesting. The Purdue Index is a great survey of farmers. It gives us both the headline farm sentiment index, which actually improved a little bit, but then buried down in it is what I like, which is the farm capital investment index. And so this is just intention of investing and spending in equipment and other types of commodities. And what we saw was a little bit of cooling month over month. So we saw a little bit of a dip from a pretty optimistic level just a month ago. But this is through the end of May, and we saw a dip to about 55. So there were still some concerns out there about some of the things happening. But Purdue was quick to point out that the survey was taken kind of early in the month, especially before we got the UK trade deal signed. And we'll talk about that in a minute. And maybe some other signals on what's happening with tariffs. But concerns over the commodity market, there's a lot of global demand destruction, which is kind of what we call it. There's a lot of global economic weakness that has filtered in since the U.S. kind of went into its trade wars. And we see trade between Europe and Asia, for instance, down. We see it between South America and Asia and Europe down. And so there's this ripple effect that's kind of gone around the world as the US has kind of tightened trade a little bit. And one of the ways that works, just to background real fast, is you think about a tariff of 145% or even 55% on goods coming from China to the US. A lot of purchasing managers have decided that maybe that tariff gets negotiated downward. And so what they do is they don't order new products. They've shipped in anything that was sitting and waiting to be shipped out, and they'll go ahead and take delivery on that at the moment, but they're not ordering anything new. So that slows down manufacturing in China. And then China ordering raw materials into their manufacturing sector slows down those orders. And that's where the ripple kind of goes across the global market. We had 21 countries in the world that had manufacturing sectors in contraction in May. That's out of the 30 major markets that we watch. So the majority of manufacturing sectors were contracting. Um, that will improve as we kind of get into the second half of the year. We hope. It depends on what happens with tariffs. And we know that the tariff easing, that the tariff and the trade barriers will get removed, and that will change the environment between now and hopefully early in July. But right now, still a challenging environment. And so a lot of that global pressure is hitting the agriculture industry, and we don't see a lot of strong commodity demand at the moment because of that. It's kind of the ripple that's kind of hitting ag exports. So That's why maybe the sentiment indicator fell just a little bit. But I'm going to go glass half full and tell you that it still remains in a range that's still higher than it's been, since really kind of the pandemic. So that optimism is still there in the farm community. We just need to see them take that next step and, put their money where their sentiment is, if you will. And hopefully we'll see that happen over the next couple of months. So the machinery production estimate, you saw the producer price index there. So we do see in the forecast, this optimism, and this forecast also measures demand looking forward for overall machinery. And we do see this improvement, a little bit of sluggishness, but this was done after the reciprocal tariffs were announced. So any impacts that would have been felt in the economy at that time would have started to show up in this index as we see like in other indexes like the retail index. And right now we see just a little bit of softness, but overall it still is a pretty good environment. We've got to go back to 2022 and 2023 to find an environment that looks this good looking forward over the next 18 months. So that's a good signal overall. Okay, in the UK deal, a lot of people want to just, blow off the trade deal that we struck with the United Kingdom early in May as a non-event. But when you really peel back the layers of the onion, what you realize is that there was almost a $24 billion agreement to increase U.S. exports to Europe, or specifically to the UK. Sorry. $24 billion incremental increase in exports. Of that 24 billion, and that's annual, of that 24 billion, 5 billion of that is brand new market access for US farmers and ranchers because it really cuts those non-tariff barriers on beef, ethanol, and a lot of other produce. So we think about 700 million in ethanol and about 250 million in beef, and then the rest of it being in other agricultural products. But again, $5 billion incremental boost in spending. So overall, you look at it in terms of, the range of the overall ag sector, and may not feel like a lot, but to individual farmers and the farm communities and those that can feed exports, especially feeding the northeast of the country, this is going to be a nice benefit. And this is only one of 18 deals that are going to be cut. And one of the things that the Trump administration is really focused on is making sure that they put ag first. I know that sounds crazy, and they're not talking about a lot of that out front, but you've got some really great trade representatives and some really great secretaries that are pushing ag, and they're in the president's ear all the time. President loves the ag community. And so even though it doesn't feel like it at times, because ag can kind of get caught up in the fray as we're going through these negotiations, on the backside of it, typically there's a pretty good agreement here that really helps the industry out. So we'll see what happens. Those relief payments, 30 billion, still filtering into the industry. We still think about 3 billion of that will be used for new equipment purchases. We'll see how that plays out. And then a lot of technology trends are still really active and driving a lot of new investments as farmers really try to increase their productivity and improve yield. So that's what's coming overall. So economic forecast, we think we're going to get a fairly low tariff scenario, and we think by July you're going to have the majority of these trade agreements done, and that's what's most important at the moment. So as we see the trade deals come across, we're going to break them down and try to figure out how much of it really helps the ag sector. And we're really going to be watching like South Korea, Japan, some of those key Asian markets where there are really big ag markets available. But up until now, they really have prevented a lot of U.S. exports into those markets. China's another one we're really watching closely for ag deals. So that should help the industry overall, and that may be why we're seeing some optimism in the demand index overall. But we'll get into more detail on that as we do the next recordings early in July. Hopefully, some of these deals will be behind us, and we can give you more color on that. So that's what I had for you this quarter, or this month, I should say. Sorry about that. Hope you all are doing well and stay safe, and we'll see you in a couple weeks. All right, take care.